Hey guys, welcome back. I hope you had a really great day trading yesterday. So yesterday was Thursday, December 5th, and we did have a red day across the board, and we'd had some really low trading volume, really this whole week. And we did open SPY flat yesterday, and then from there we did push up to make new all-time highs, and then we pulled back into the red to stay above this 35 EMA, which has been defining the uptrend ever since we bounced on this election gap. So the election right here, and then from there we pushed up, pulled back to this gap, found support on that level, got above the 35 EMA. This right here was Nvidia earnings, and we stayed above that 35 EMA ever since. Yesterday we closed right above that level, so we're still in the uptrend, and we had a very small trading range yesterday, just 0.43%, and we stayed completely within that. And SPX, same thing over here. We did open making new all-time highs, and then later in the day we made higher new all-time highs. Then we pulled back into the red to close down 0.19%. So SPY closed down 0.16%, SPX down 0.19%, VIX came up 0.74%, and in both we did stay completely within the implied move here. And QQQ, we saw the same thing over here. We did have a very small trading range yesterday, 0.63%, and we stayed right in the middle of that. We opened flat, then came up, made new all-time highs, and then pulled back into the red. Here we also stayed above the 35 EMA, which still put us in the red. And if you were watching Stupid Willie down below, we did get that red cross down. We were extremely overbought and pulled back into the red yesterday. So QQQ down 0.28%. VXN closed completely flat yesterday, 0.00%, and we stayed completely within the implied move here. IWM yesterday had the biggest down day, down 1.17%, and we did open with a gap underneath the 35 EMA, and that level did hold as resistance for the entire trading day. So we gapped underneath it, then we dropped down to fill this gap from 2 Mondays ago, not this Monday but the Monday before. We filled that gap, bounced back up, saw resistance at the 35 EMA, and then dropped down to the bottom of the implied move. So 238 was the bottom of the implied move. We closed right on top of that, 238.08, and we did close down 1.17%. RVX closed up 1.33%. And we did close within the implied move. For a very brief moment at the very end of the day, we dropped underneath the bottom of the implied move and then pulled back up to close within the implied move. So if you did sell 238, 237 bull put spreads, those would have filled at the very, very, very end of the day, and they would have paid. And lastly, we have DIA, and DIA has been trading sideways all week. We did have a down day yesterday. We did not make new all-time highs, even though we opened right at that level, and we did right away pull back down to the 35 EMA. Very flat week this week. This is where we started the week, and we are just a little bit underneath that right now. Still well within the implied move for the week, so if you did put on some iron condors at the beginning of the week, those are still doing great, and we're still holding pretty close to that 35 EMA. So here we did see the bounce on the election gap right here and got above that 35 EMA, and this week we have been consolidating around that level. So DIA yesterday down 0.50%, and we did close within the implied move on the day, and also we are still within the implied move for the week. So today, this morning, we have unemployment data coming out, hourly wage, consumer sentiment, and consumer credit. So we have a ton of data coming out today. So let's head over and check out tomorrow's levels. Alright guys, so before we head into today's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every day, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, leave me a comment. And if you nailed that trade and you know it's because of something I said, then don't be afraid of that thank you button. You can buy me a coffee, you can buy me dinner, and I really appreciate you guys. All right, so today's implied move in SPY is between 603 and 610, and that is from options. The 30-day average volatility is about twice as wide, 599 to 614, and then on Monday's contract, 602 to 611. To the upside, the first level to look for is going to be right here where we have all-time highs. We did make those yesterday, so that is at 608.48. And then if we do get above that, the top of the implied move is at 610, 611 on Monday's contract. And then to the downside, we do have the 35 EMA. This has been a very steady support for us since we bounced on the election gap back here and Nvidia earnings right here. So 35 EMA, and that is just underneath us. I think that futures right now take us pretty much right on top of that, maybe just a little bit underneath it. So if that level does break, the next level is going to be this up gap that we saw on Wednesday. The bottom of that gap is just around 604, and then 603 is the bottom of the implied move for today, 602 on Monday's contract, and underneath the entire trading range here, we do have the 30-minute 200 moving average, and that momentum is still going up. Even if we pull back all the way down to the 30-minute 200 moving average, we're still in an uptrend. And after this run right here, that would actually be a pretty healthy move. And SPX, the implied move over here for today, is between 60.40 and 61.10, and that is from options. 30-day average volatility is about twice as wide, 6,000 right here to 61.50, and on Monday's contract, 60.30 to 61.20. To the upside, we do have these all-time highs right here that we made yesterday. That is at 60.94.55. Top of the implied move for today, 61.10, 61.20 on Monday's contract. Underneath us, we have the 35 EMA, and futures again might take us to underneath that 35 EMA at open. So if we do break this level, if this doesn't catch us today, then the next place to look is this gap from Wednesday. The bottom of that gap is 60.49, and then if that fills, we could see a technical bounce there. We often see a bounce when a gap fills, and if we do take it lower, 60.40 is the bottom of the implied move on the day, 60.30 on Monday's contract. 30-minute 200 moving average is underneath all of that, ready to catch us if we do drop. And then QQQ, the implied move over here, is between 517 and 526. That is from options. The 30-day average volatility, 513 to 530, 516 to 527 on Monday's contract. And here we have the new all-time highs that we made yesterday, and that is at 524.04, and above that 526 is the top of the implied move, 527 on Monday's contract. 35 EMA is underneath us. With that up gap from Wednesday, we did see a bearish cross down in Stupid Willie, which if we do break this 35 EMA would make the next level to look for 517, and then the bottom of this up gap is 517 rounded again. So 516 is the bottom of the implied move on Monday's contract. We do have this up gap right here from Monday and the 30-minute 200 moving average. We're pretty far away from that level. We're pretty due to bring that either closer, and that can happen by trading sideways here, waiting for that level to catch up, or just dropping down to it. But either way, we are pretty far away from this level, and we don't stay far away from this for long. So 30-minute 200 moving average definitely should be on your radar. And then IWM. The implied move here is pretty wide today. It is 234 to 242. It's pretty wide for IWM. And that is from options. The 30-day average volatility is $2 wider in each direction, and that's 232 to 244. And on Monday's contract, 233 to 243. And to the upside, we have the 35 EMA. That was resistance today. This gap right here we can ignore because that got filled today. And if we get above the 35 EMA, then the next level to look for is going to be the top of the implied move at 242. 243 on Monday's contract. We did have a bit of resistance right here around 242 and a half, which could make 243, 244 an attractive spread to get a little bit above that level. And to the downside, 30-minute 200 moving average, which has gone completely flat. We did lose momentum on this time frame. We might need to take it down to the 1 hour and bounce on that. That does have positive momentum. So 30-minute 200 moving average, we don't have to drop below this level, but we don't have to bounce on it either. We could stay sideways here, or we could take it a level down where there is momentum. 234 is the bottom of the implied move for today, 233 on Monday's contract, and because this 1 hour 200 moving average is here, 234, 233 could be an attractive spread. And if you do want to get a little safer, 233, 232 might be a good one as well. And then lastly, DIA. The implied move on the day here is between 445 and 452. That is from options. The implied move on the week, 444 to 456. And to the upside, we do have the 35 EMA. We've been chopping around that all week, so we may just stay close to that level to close out the week. And if we do pop up, 452 is the top of the implied move. That does line right up with where we have all-time highs. And then to the downside, we do have a support right here. That is the low of the week, just under 447. And then 445 is the bottom of the implied move. Underneath all of that, we do have the 30-minute 200 moving average and this up gap from 2 Mondays ago. So that is where we have a pretty decent support level at the very bottom of the trading range. So there you have it, guys. Have fun today. Trade safe. Make sure you take profits when you're up, and I will see you guys on Sunday night.